In the metals quadrant, gold's inverse relationship to the US dollar has taken over. It's resumed. We've actually had periods of time over the last month and a half where we've seen gold and the US dollar rally at the same time. Their normal relationship is inverse. One goes up, the other goes down. That has seemed to resume as we take some of the geopolitical premium out of gold, and pretty much all day gold has kind of fallen down a little bit more than 0.75% after jumping to 1226.90 and then falling from there to get to a low of about 1211.40 in the futures contract. Again, that's a little bit more than 0.75% as it get in toward the end of the day, with the dollar index approaching its yearly highs. 9769.3 is that yearly high. We got as high as 97.496 today. So getting close and continuing to rally, with the dollar index being up a little bit more than 0.25%. Fed speak, part of the reason, although it wouldn't really add to the dollar strength, certainly added to the gold softness, as we saw Fed Vice Chair Richard Clarida, contradict Jerome Powell in terms of where the neutral rate is for the Fed. Clarida echoing Raphael Bostic about a week ago, saying that they were much closer to the neutral rate than it seemed, whereas Jerome Powell 2 weeks ago said we were nowhere near the neutral rate. We have Jerome Powell this week speaking at the New York Economic Club. He might walk his statement back, seems like he would, as you have these very influential vice chair and Fed presidents speaking, saying we're near the neutral rate, seeming to put a little bit of an ease on equity markets, contributing to that gold sell-off. Not necessarily to the dollar rally, however. We've got a couple more Fed speakers today we're waiting for. Bostic from Atlanta, as I mentioned. We've got Charles Evans from Chicago, and we've got Esther George from Kansas City, all speaking later in the day as well. And then seasonal factors starting to approach in gold. We're not there yet, but there's a time of seasonal strength that has happened very often in gold, where gold rallies in toward the end of December through January. Last year, 10.2% rally in January. Prior year through February, an over 11% rally in gold. We're approaching that as we get into December. Not quite there yet, but you have to keep an eye on that. If there's a rally, it's not necessarily because of the Fed, and it's not necessarily because of some sort of geopolitical tension. It could just be those seasonal factors taking over in gold later in the month of December.